to Tradespoon and Yellow Tunnel. My name is Vlad Karpel. I'm CEO and founder of Tradespoon and Yellow Tunnel. Today we're going to have a live trading room open to trade stock and options using our technology. Before we begin, let me know if you guys can hear me and see my screen. We'll begin shortly after. Faust, Howard, Michael, Brad, how are you? Let's review. I'm good, thank you. Yeah, thank you. Yes, Thinking Fast and Slow by Daniel Coleman. Great book. I do agree. Thank you for the recommendation. All right. Let's see. Last thing to do is to get Discord, guys, and then we can start. One second. Okay. Sorry for the delay. Let's start. Welcome to Tradespoon and Yellow Tunnel. My name is Vlad Karpel. I'm CEO and founder of Tradespoon and Yellow Tunnel. And today we're going to have a live trading room open to trade stock and options using our technology. For those of you who are new, welcome. If this is your first live event, do me a favor, type in first. Always want to welcome new subscribers. Howard, thank you for recommending your friend. That was very nice of you. Referrals are obviously the best, sign of confidence. So thank you for that. I've been trading and managing my own money. I've been doing it for over 15 years, mentoring and teaching subscribers how to trade stock and options. And finally, I have a master's degree in computer science, specializing in statistics and artificial intelligence. I want to say thank you to all the subscribers. Because of you, I'm able to do what I enjoy professionally, managing and trading my own money. I've been doing that for over 15 years, mentoring and teaching subscribers how to trade stock and options. Disclosures are very important. Please read them. If you're new to trading stock and options, I encourage you to visit this link, optionstrading.com, to understand the risk associated with trading stock and options. I'm not a financial advisor. I'm not registered with FINRA or SEC. I'm showing you what I do in my own account based on my own risk tolerance level for general education, information purposes only. Oh, Bill, thank you very much. Thank you. No, I mean, only if you have friends that are interested in trading. Obviously, if you're not interested in trading, this is not the place to be. Okay. So pause the screen if you need more time to read the disclosures. I'm here to show you what I do in my own account based on my own risk tolerance level. Should not assume that the future trades will be profitable or equal past performance. All right. Let's quickly go over main concepts of trading psychology. I think majority of the people, when I do the webinars, the goal is risk management, right? Wealth preservation, very common goal. Income, right? Full-time income, part-time income, second goal. Third goal is education, right? But at the bottom line, that everybody, almost everybody, no matter if it's in education or wealth preservation, wants to be kind of a disciplined mechanical trader, right? That has kind of the mechanics of the trade, that trading becomes very mechanical, not very emotional, and repeatable process, right? It's a repeatable process where you can write it down somebody like a plan, and they can just take it and repeat it, right? That's everybody's goal. For that, one of the main foundations to be disciplined trader is always think about process versus outcome, right? If you want to be a mechanical trader, your target gain, your stop losses, your position size has to be always the same. You have to keep a journal. You will have to write it down, right? Every time you trade on a $10,000 portfolio, not risk more than $250, which is 2.5%. If you're doing day trading and you have minimum is $25,000, same thing, less than 1%, $250. So that is the most important rule that will help you to make trading more or less mechanical and grade yourself, right? If you follow the rule and your target gain in stop loss and position size is always the same every single time, then you give yourself A or B based on the outcome of the trade. If you broke any of these rules, then I propose to write C and D. I think that's the most important thing that you can do as a trader, which I cannot repeat enough. I was actually at the Metastock conference. Usually I don't go to these conferences, but I did present. Usually they have a good turnout. There was actually one person that talked about trading psychology. Usually nobody talks about trading psychology, but he did. So that's very important, right? And this whole point is how your relationship with money. How do you feel about your relationship with money? What are your goals? Why do you trade, right? All of these are very important, right? So having one-on-one coach, mentor is important. Group coaching are important, and just kind of being self-aware and realize why you're trading, right? What is the main goal? We're trading to pay off the car. Well, that puts a lot of pressure, right? It has to be money, kind of discretionary income that you don't have to think about, every day, right? If this is the money, if you're trading with the money that you have to pay mortgage with, that's a problem, right? That's a problem. So a lot of these nuances are very important, right? And for that, it's important to understand, this idea of trade setup, right? So let's go over that. How do you determine your stop losses? Market is most of the stocks are highly correlated to S&P, right? Where S&P is going to go, that's where the stock market is going to go. So for most of our trades. So for today, let's see, May 15th, very familiar. We've been trading for the past 6 weeks in this very narrow range, right? Very narrow range. And at some point, we're going to break out of this range, right? So those are your target gain and stop losses, right? You have to recognize these. Model basically says for today, 408, 414, okay? So you go to spiders, pre-market, well, actually, the market is open, 412. 408, 414, we're at 412. I mean, it's kind of in the middle of this range, right? A little bit close to the upside. So we've been at this level many times for 414. Model basically says 414, consider going short. The stock market is overbought. That's your 414, right? That's resistance number one. April, May high and January, February high is around 418, 420, right? That's your resistance number two. So if you're short in the market and you think, there's 2 weeks left to that ceiling, and by the time they write all the, rules and legislature and vote, and, we might not make it to June 1st, right? So you decided, okay, I'm going to short the market. It's overbought. It hasn't really gone anywhere since January. So I'm going to short. Well, those are your levels, right? If you're doing day trading and we break above 415, I would probably, get out of the short position. If it's a long-term trade, right, medium-term trade, right, if we do break above 418, 420, the next level is 430, August high, right? 430 is August high. So those are your levels which you can decide on your stop loss. But the rule is $250, right? On $10,000 portfolio, it's $250. On $20,000 portfolio, it will be $500. So $250, and that's always the same amount. Whether you trade stock, options, futures on options, Bitcoin, it doesn't matter what the underlying beta of your asset class, you never risk more than $250. So if something is more volatile than spiders 2 times, well, then your stop loss is going to be 2 times of that amount. So 411 to 415, 4 points. If you're doing day trading, right, I would say 5 points. Maybe right above. If you want to hold position for a week or 2, I would maybe put 418, 420. So let's call it 10 points. Give yourself a little bit more room. Give yourself a little bit more time. Right, so 10 points. So $250, this I can trade 25 shares. I forgot my coffee. And this I can do 50, and this one I can do 50 shares, right? So if it's a 10-point stop loss, 25 shares. If it's 5-point stop, 50 shares. And I risk no more than $250. Well, then I'm going to hold this for a couple hours, or I'm going to hold this for a couple, days or weeks, right? And same thing on the downside, right? You think that we will reach an agreement and Google is going to continue to rally because artificial intelligence is going to take over our lives and make it much better. Okay, then, your support one, last 2 weeks lows, it's around 408, model is correct. Support number 1 is 408. And support number 2 is around 404. So this is the most important exercise. Once you do it over and over again, it'll be very quick. You look at the chart, right away. Until then, you kind of can look at the blog, video blog, rely on these levels. And it's something, if doesn't matter what you're trading, most of the stocks will probably go down if we break below 404, right? 50-day moving average. Most stocks will go up if we break above year-to-date high, 420. So this is the most important exercise. I would say doesn't matter if you're doing day trading and you're trading in 5 minutes. This is how your brain, or at least how my brain works, right? I always look at the risk versus reward, determine the size. Size is always important. And, ideally you want to trade at the support resistance level, right? When we were in the middle for 11, right? In the next 30 minutes, we could be at 414 or we could be at 408, right? On one hand, we have better than expected. Looks like there is a progress in the debt ceiling, right? And, Biden has done it many times, negotiated debt ceiling. So most likely, we're gonna, find some kind of resolution. But then Empire Manufacturing Survey was, disaster, right? It was a disaster. Contraction, a lot worse than everybody anticipated. So if you look at the futures data, we're driven kind of by these headlines, but nothing is new. It's not really a new information. So you can see that we were much higher pre-market, right? Pre-market, we were much higher at 415, and then, as soon as the manufacturing data came in, market is losing steam. So, on one hand, we have artificial intelligence and improvement in debt ceiling negotiation. On the other hand, we do have macroeconomic data that continue to point that we are potentially in contraction. Economy is in contraction. 2-year yield, 10-year yield actually continues to rebound, right? As long as the 10-year rebounds, trade in this range, I think market is going to trade in the range. If we break to the upside, yield continue to go higher. That's expectation that we can avoid the recession, right? So, and eventually 10-year and 5-year will continue to go higher. So that's bullish. If we break below 3.3, then that would be bearish. I would also look at the dollar. Dollar kind of building this bottom for, since the beginning of the year, trading in this range, and at least last couple of days it did move higher, so pay attention to dollar. VIX is 18. Value stocks continue to underperform, right? Golden cross the other way around, that's bearish, right? It's kind of a classical. We said it here in December, that gave a boost to the market, and now it's in reverse, right? So most likely, 7 out of 10 times there is continuation to the downside, and it's sitting in the key support. So that's everything but technology. And technology is, we did have a reversal on Friday. We need to follow through, so we'll see where we're going to have it. But, stocks like Google, Microsoft, they are, drinking Kool-Aid on their AI promise, and they are continue to trade high. But, nonetheless, sitting at key support, right? Here, Microsoft has been kind of for the past 4 weeks not going anywhere. 52-week high, right? Almost at all-time high, and this was one of the weakest stocks last year. And then Google is at August high, right? And Apple is, where's Apple? Apple's at all-time high, close to all-time high, and Meta is 50% retracement of its overall losses. So a lot of support, a lot of overhead resistance, right? A lot of assets are sitting in the key support levels. Any questions? Good morning, Bob. Present. Thank you. File extension for a while on the debt ceiling. I'm sure they'll find some kind of a solution to debt ceiling. All right. At least that's what everybody thinks. But I did, I was driving my kids to school, so I usually get sometimes late. And they were talking about that Biden has a lot of experience negotiating debt ceiling as a vice president, as a senator. But, we have 2 weeks left till potential default, and it takes at least 2 weeks, even if they find an agreement now. It takes 2 weeks to vote, write things down. It's a long process, right? Congress doesn't move very fast. So we're getting very close to this deadline. So, and I know that credit swaps are still extremely wide. So something to pay attention on. Right now, market kind of not really reacting to this news. All right, let's review positions. Let's see if anything has changed. All right, so I did close, so continue doing these short-term, not short-term, but medium-term sprints, right? So I did the Russell 2000 before 190, 185. I closed it, so I'm out of the Russell 2000 bearish trade. I mean, small cap stocks, they're oversold, right? So I don't know when the market is going to break down, right? It could happen in the next 2 weeks because of the debt ceiling. It could happen during next earnings cycle, right? Earnings cycle is done, right? Most of the S&P 500 stocks already announced earnings. We do have retail data, right? Market could be volatile, like I think when Walmart announced earnings, back in May of last year, there was this precipitous sell-off, right? And it's sitting in overhead resistance. So I mean, that could be a trigger. I mean, just depends on their earnings, supply chain issues, wages, unions, and stuff like that, and how healthy the consumer is. So that could be a trigger. But for the most part, you always kind of assume that if you're looking at the long-term support, it's probably not going to be broken, and probably going to be some kind of a rebound first, right? So it's overdone. I closed the small caps credit calls, but technology, I did go short. I still think that, we're losing momentum. It's just a matter of time for technology to follow the value stocks, right? Because value is under pressure, right? That's the kind of $1 million question. In the past 2 years, we see these rotations from value stocks to technology. You turn on the news, sell technology, buy value, buy, JP Morgan, buy ExxonMobil, right? They're going to do well. They pay you a dividend. They're reaching cash flow and blah, 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 right? Then the next 30 days, sell your banks, sell your, oil is collapsing, but, technology is going to continue to go. So these rotations from value back to technology, from technology back to value has been on for the past 12 months. And sometimes they last a very long time. So that's kind of hard to predict. I think that technology will follow the value, right? I think that the value is not done pulling back, right? VTV, value stocks. And there's like 3,000 stocks in this ETF. So I think we're going lower. Continue to go lower and technology follows. Could be scenario the other way, right? That the value actually rally and technology may be staying the same, but the value rebound. But we'll see. I mean, they are sitting like Wells Fargo sitting at the support, right? They could bounce at least short term. ExxonMobil can, bounce, sitting at the support. So we'll just have to wait and see. So for that reason, for now, I did go short. Got filled on QQQ 335, 340. I don't think by July we'll break that level. I think we're going to go the other way. TLT, continue to trade along TLT, right? That's going to be my favorite trade. Sold at 105. It's trading at 103.34. I think I can repeat this trade again, probably. Right, TLT. I mean, it's been at this level. We're looking at the weeks, right? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 11, 12 is 100. So, there's $3 to the downside, maybe $7 to the upside. I think it makes sense to trade. Again, I would size it. Right away, my brain thinks about the most, if this level doesn't hold, then we're going to, year-to-date low, 99, right? So $4. If this is a new trade, $4 divided by 250, 60 shares, right? Probably don't want to commit all of it. Buy 30 shares, right? That's my thought process. If you already have at risk $250, then you probably can do it, right? But if you did trim your position, okay, then maybe it makes sense to do it, right? But you always, as I think about these trades, whether it's day trading or longer, whether it's a 5-minute chart or 1-week chart, I think about these time frames and the levels that I'm gonna get out, not to lose more than $250, right? And if it's day trading, it's less than 1% of your position. And then I would write it in a journal why I did, And that would be the trade. All right, so I'm repeating this TLT trade. In theory, yield should continue going lower, right? It should continue going lower. Longer term, right? Longer term, because inflation has fallen down. So at some point, Fed will pivot, right? Right now, it's going high because nobody thinks that Fed will pivot. But if unemployment remains low, right, and inflation is going to continue to tick down, okay, the Fed will lower interest rate, a very restrictive environment, right? So that's good for TLT. If we're in recession and economy is contracting, that's good for TLT also, right? So the only way TLT can go lower than 99 or continue to go lower if inflation comes back, right? If inflation comes back and we don't have a recession, right? And the market doesn't fall apart, right? So that could be where it just continues to go in that direction. So that's TLT trade. What else? And these trades we covered. Okay. Yeah, I mean, continue to trade around this position. I do like position management, right? Where you just, buy at support, sell at resistance. And it works well when the stock is in some kind of range, and the whole stock market has been in range. So it makes sense from that perspective. CMG. CMG. Let's see. This is delayed. I mean, there are stocks that are outperforming spiders, right? A restaurant, right? Reopening, people are still traveling, unemployment is low. We'll see what the retail numbers look like this week, right? That could have a big impact on stocks like Chipotle, Mexican, right? The consumer is weak, and they're not shopping in Walmart, and they're not shopping in Home Depot this week, then they're probably not going to buy a burrito. Or maybe, could be, right? Could be. But nonetheless, it had a very strong earnings. Flag formation usually goes to consolidation. And if the market is going to continue going higher or trade sideways, I think there is another leg up. Model identified. It's not going anywhere for the past few weeks, so I'm a little bit cautious about this. But for now, just watching. NOC, also long NOC. Pretty, it's the same thing. It's sitting at this key support level. I mean, most of the time it does bounce back, right? But for now, it's still been weak. It could be that, Russia-Ukraine war is finding, reaching this level where it could potentially, at least find some kind of a solution or some resolution. This counter-offensive that Ukraine has been planning for already for months. So everybody's talking about this. I guess the expectation, if all of a sudden Ukraine takes over all of their territory and there's some kind of an agreement, then defense spending is going to contract. And you can see it in most aerospace and defense stocks. So I'm watching for that level. If it breaks down, I would get out of this trade. Right? That hasn't changed. QQQ, we talked about QQ, so I'm bearish in June. 280, 290, I mean, we're getting close to June. Right? We're months away. So we need this pullback to start in the next 2 weeks to reach at least this, 250-day versus 250-day moving averages. Well, 50-day is 313, 200 is, it has to break 300 to reach 200-day moving average. So we'll see. May not be enough time. July, we talked about July. September, July, September, I feel more confident. June, kind of a question mark. If you're uncomfortable trading options and hedging your positions, then you can trade SH. Right, that's one way to hedge your portfolio. I propose to have 4 positions. If you're new to trading, again, I would not have more than 4 positions right now. Right, I'll go to live trading room. You can ask, what are those 4 positions if you're not sure, but I would only have 4 positions at a time. Right now, market has been sideways neutral. You can just say, listen, okay, then as long as it's sideways for the past 6 weeks, it might be sideways for the next 6 weeks. So 2 bullish, 2 bearish positions. Right? If you think we're going to break to the upside, then you can have 3 bullish, 1 bearish. If you think we're going to break to the downside, then you have 3 bearish, 1 bullish. So on these bearish positions, SH, right? That's inverse of spiders, 1-to-1. Silver has been under pressure. A lot of it, I think, has to do with the dollar. Right? Silver probably doesn't like a very strong dollar, so we did have a pretty sizable move in the dollar. So that could be, or could be that just way overbought, right? And it's at 52-week high, and if there is no momentum to the upside, then you have a pullback, right? So I'm kind of waiting to find a bottom, and then potentially add to silver position. So silver, TLT, we talked about TLT and TAP. TAP, similar pattern to CMG, had a pretty good earnings. Again, flag formation. I think if market trades sideways or to the upside, then I think there's another leg up in TAP. If consumer is weak, this is more of a consumer staple, not consumer discretionary. So we'll see. Okay. These are an XLF, right? I do have position in XLF. So still bearish on banks. Right? I think banks and small caps are one of the weakest stocks. So far, very weak rebound in banks and very weak rebound in regional banks. They're sitting at the key support resistance levels. In terms of earnings, we do have, this is retail. This is the week of retail earnings. So if you have retail stocks, expect volatility this week. Let's see what we have. So we have Home Depot tomorrow morning and Baidu. So those are probably the stocks we'll do at the closing bell. Let me do my research. Home Depot. The only problem with Home Depot is a $300 stock on $10,000 portfolio. I probably would not do it, right? But and the volume is pretty low. That's another problem, that volumes are deteriorating as we approach summer. Baidu, I think, has a little bit bigger volume. Not that much bigger. Okay. But those are the 2 choices for tomorrow. Okay, yes, the Empire manufacturing data has been weak. They updated. I think they said -30. That's a crazy number. I don't know, it hasn't been updated yet, but I know it's been very low. Largest drop except during COVID pandemic. Okay. And the market for now kind of shaking all this data off. People are not convinced one way or another. Yields are flat, right? Not a lot of movements in yield, except the TLT and 30-year. 30-year. Dollar slightly lower, value slightly lower, QQQ slightly lower, spiders slightly lower. So we're back in the middle of this range. It is slowly deteriorating. You know, we're approaching basically, I mean, I'm going to retest last week low probably, around 408, 409 low. All right, any questions? All right. Howard, thank you for referral. Appreciate it. If you have any other friends, please send them our way. Oh yeah, the announcement. Let's go with the announcements. I skip. What's the announcement? YouTube. If you haven't been in the closing bell, we still have retail earnings, right? So earnings almost every week there are earnings. You know, sometimes there's a lot of earnings, sometimes there's not a lot of, but every week there are earnings. So Wednesday, closing bell or morning bell, right? You can participate live. If you haven't clicked subscribe, please click on subscribe. We're over 1,000. Next goal is 2,000. People are watching the videos, so I appreciate that. Please consider joining our YouTube channel. I'm going to put that in the link in the questions so you guys can see it. And if you are trading options, consider this $0 commissions. You know, most broker-dealer charge you $1 a contract, right? So if you do 10 contracts a month, you break even. Here, it's a flat fee, $10 a month, or zero if you reach their minimum level. I mean, I guess most people will not reach their minimum level. Some will not. But most you will pay $10, right? And if you're doing options, and especially if you're doing earnings strategies where it involves multi-legged strategies, it's probably 1 or 2 trades and you spend $10. So this could be significant savings. It's US-based brokerages. A lot of people that I know back from Options Express days. So consider joining them. And full disclosure, I do have marketing relationship with them. Yeah, very much against Biden. Thank you, Kevin. Energy, and question was on energy. I mean, you kind of, it's again, you're either in the, I think if you're in the soft landing camp, and soft landing is right, then like Bitcoin, right? It did pull back, broke through the support levels. It's sitting on the edge. So Bitcoin and crude oil are your proxies for risk, right? For the recession, right? So if you think we can avoid the recession, this is the time to buy crude oil and Bitcoin, right? Because they're extremely oversold. They lost half of its value. We're going to avoid the recession that's not priced into the current. You know, one of the arguments, again, Mark, is Mark here? Where's Mark? I haven't seen Mark for a while. Mark. Victor's here. But going back to Mark's point, one of the strongest arguments for the bull market, right? It's the same argument we had in December, right? In December, sentiment was so low, and everybody was so bearish on the economy that this was a good setup for a 20% rally, right? In technology, right? In spiders, it was the 80 to 10% rally, right? So 10% rally in spiders, 20% rally in technology, because everybody was so negative on the economy, right? And then China reopened, and people gonna start buying Chanel bags. My wife is super happy that the price is doubled on Chanel bags, and you have a big rally, right? Right now, it's very similar setup. I mean, granted, we're not at 380, we're at 411, but everybody thinks about recession, right? Because you look at the manufacturing data, services data, inflation, everybody thinks about that we're in disinflationary environment, market is contracting, and the only thing that's holding is this concept of, lagging indicators such as employment, right? That everybody's employed, but, once once the unemployment data ticks up, that we're already in recession, right? Like it's a lagging indicator. So that's the answer for crude oil, right? If you think we're going to avoid recession, this is a screaming buy. If you think we are heading into recession, you're probably going to be a little bit early, right? For trading, you can trade basically anything, right? Same thing, right? It's sitting at support. It looks like a 10-year yield, right? It's sitting at the key support. Most of the time it rebounds, right? You could probably rebound, 10% very easily, right? So you can buy because you have a clearly defined stop loss, right? I would say if we drop below 63 or 60, you can say, okay, I'm going to risk 10 points to make 10 points. I think we can be at 80. And, if we drop below 60, well, something's wrong. So that's a good trading setup, right? Or you can say, last week is enough low, 63, right? 7 points to the downside, 10 points to the upside. Or if you're in soft lines, and then, we can rally 20 points, right? We could get to 90 very quickly. We're approaching summer. People travel during summer. I'm going to my wife wants to take a road trip to, either California or North Carolina or Miami, who knows? I'm not alone. People want to travel. Long term, I think that's the difference. Kevin, yeah, I mean, the only curveball in this whole negotiation is Kevin McCarthy, right? He hasn't been. Biden knows everybody, right, who's been there long enough, because he's been there very long enough. So, when it comes to who's the minorities, I'm drawing blank. Mitch McConnell, sorry, minority leader, said. I'm drawing blank. So Mitch McConnell, he's been there long enough. He knows Biden, they're friends, maybe not friends, but colleagues. They'll reach an agreement. But, Kevin McCarthy, he doesn't know. This is the first time he's negotiating with him. The time is ticking, right? There are only 2 weeks left. They have to make an agreement. They have to write it down. Everybody has to vote. That's a caveat, so. But again, market basically, for now, just ignoring this, right? Market assumes that there will be an agreement, right? If you're not so sure, then, okay, you buy QQQ put spread, or you buy SH, because, obviously if they don't reach an agreement or not on time, they have to close parks, they have to close, post payment of federal employees. It's not going to happen all at once, right? They usually have some kind of extensions, they can, pause payments of park employees, stuff like that. So we'll see. Kevin, thank you. John, thank you. Okay, Kevin, I'm not going to repeat your comments. This will be just between you and I. Okay. Bob, miss me Friday. Thank you. Sorry, I'm traveling. Actually, tomorrow, we will have a closing bell today. Tomorrow, we may or may not. I'm going to cancel it. You know, my mom has a eye surgery, and I have to drive her to hospital. I mean, it's an eye surgery, right? You know, it shouldn't take more than half an hour. It's, you know, right after, you know, in the morning. So in theory, I should be there, but I might not be. So, you know, it will be last minute cancellation if it's going to be canceled. So tomorrow, I apologize in advance if I don't come on time. You know, I have some family issues. My mother, my grandmother. My grandmother is 90. How old is she? 90. 2006. She's 90. 97. She's 97 years old. So she also has health issues. I'm helping my mother. So we'll see. If I do cancel the last minute, I apologize. All right. Yep. Bob, yeah, I will. But today I will be at the closing bell. Today, yes, I'll be at the closing bell. We'll go over Home Depot and Baidu. JD had earnings, right? JD had earnings. I mean, initial reaction up, then down, right? It's kind of, you see a lot of stocks. How's Shopify? Is it same thing, up, down, or is it still up? Yeah, it's pulling back, right? So initial reaction, strong rallies, right? But then, you know, you have big pullbacks, the same. Robinhood, same thing, right? Elevator up, elevator down very quickly. So JD, you know, elevator up, elevator down. I think we will see Baidu. I mean, probably same kind of reaction. My earnings don't really matter that much, right? I mean, maybe like how's Palantir doing? That's even Palantir, right? This is all about, you know, artificial intelligence. Everybody's psyched up about AI, and Palantir earnings from 7 to 10, 30% move. You know, it already gave up, you know, 10% of it. And, you know, if I have to guess, and market pulls back and continues to pull back, Palantir will be back at 7. Right, so earnings don't matter. What matters are macro and microeconomic conditions. Short term, obviously, they matter, right? If you bought it at 7 and it moved 30%, you're very happy. But longer term, you know, you give it a couple of weeks, you give it months or two, and, you know, they'll matter less. So Baidu, let's see, is the volume a little bit higher? I like trading Baidu. I mean, volume, I'm not too happy about the volume, and it's Tuesday. But maybe Baidu, small volume. Let's see. Yeah, Home Depot is also not a lot of volume. Okay. Bill, thank you. Bob, thank you. All right. What else? What else? 909. We went over the stock. Let's see what's going on with the market. I mean, small caps are up. ARK is up, right? They got beat up last week, so they are up. You know, GDX is up, silver up, gold is up. QQQ is down. Value stocks are down. Let's see what else is interesting. Let's look at some of the sectors. Materials got beat up last week, right? They're sitting at the key support. Again, that's not good. Home builders are still in rally mode. Looks like they're building the top, but nonetheless, our inventory is extremely low. Metals and miners are up. China got beat up last week. It did rally today, 2.5%. Industrials are not going anywhere, but they're sitting at the support, kind of value stocks, right? Energy, XLE is sitting at the support. Utilities are pulling back, right? They're sitting at the key support level. Healthcare also rolling over. Consumer discretionary retail numbers, you know, pulling back. So mixed bag, right? Mixed bag. We're still kind of trading in the range. No new signals, nothing. I don't see anything exciting going on in the market. It's kind of everybody's waiting Debt ceiling, everybody's waiting for retail numbers. What else is everybody waiting for? Okay, retail sales. So we're going to have Home Depot, we're going to have retail sales. That could spark some kind of volatility, right? Because, you know, soft landing narrative stands on strong consumer, right? Strong consumer that's employed, right? So retail sales, you know, could confirm this narrative or give a contrary data. So pay attention to that. Obviously, initial claims, right? There were 264. Expectation is 255. Anything above 250,000 is not good, right? If we have consecutive 4 or 5 weeks of these above 250,000, then the theory is that unemployment rate will tick up, right? And that's kind of going to go against. It's either going to confirm or deny the soft landing narrative. So Tuesday data, Thursday data, important, right? And then we're Memorial Day and weekend, then summer, and then summer. Why am I getting these ads? Okay. All right. Okay. It's 9:12, 3 more minutes. Any questions on Discord, Yellow Tunnel? Thank you, Discord team. Yeah, so for now, the trade is, you know, you sell short at 414 and you buy at 409 if you're doing kind of aggressive short-term trading with very clearly defined stop levels. You know, if you break below 408, you're out. If you break above 414 or 415, you're out, right? Those. At 410, you know, 3 points up, 3 points down. I mean, I would wait for this level, maybe sell out of the money put spread or single short put if we do get to 408. All right, that's all I have for today. You guys are awesome. Thank you for your support. Just a reminder, please like us on YouTube if you find the data or video helpful. You navigate market volatility or become part of a community of traders where you can always share ideas, ask questions. Please click on subscribe and share the videos on the social media. And if you like to save money, especially during inflation, I actually started I usually never look at the prices. They're just not my nature. My wife does it. But now I actually pay attention because some of these prices are just out of control. Not the prices and commissions, but they're still expensive. So if you're looking to save, consider Tradier/Yellow Tunnel membership. Howard, is LLY still a good trade? I think so. Yeah, I mean, I'm out of it. I closed it because it's kind of losing momentum. But if you know, it's the same thing, right? As long as it's above 375, it's a strong uptrend. It's 60 points. It's about 15%. So same thing, right? 60 points, $250. Okay, you can buy 4 shares, right? Maybe 2 shares, and if it drops to 375. Buy 2 shares. But, you know, healthcare is kind of rolling over, right? It is rolling over. I don't know, biotech, you know, also approaching overhead resistance is very weak. So, I mean, LLY is the difference. So it just depends. To trade it, I mean, it's the same setup as CMG and TAP, right? I mean, ideally, you want to buy it on pullback, right? If it drops to 400, 385, I would be a buyer. At this level, I'm kind of waiting for at least some kind of a pullback, right? Some kind of a pullback. Like CMG didn't give a lot of pullback. CTAP also. I mean, they are strong stocks, so there's not a lot of momentum to the upside or to the downside. But I would trade them like I'm trading TAP and CMG. Small amounts, and watch for key support level. Thank you, Howard. Soros selling Tesla. Okay. Okay, I mean, Tesla is sitting in the key support, right? We broke to that level 3 weeks ago. We're sitting at this level. Tesla is just a matter of time. I mean, I'm shorting QQQ. Obviously, Tesla has to pull back for my QQQ short to work out, right? So I'm bearish, but I think Tesla is, it's just a matter of time to retest this level. All right. Thank you very much and have a great day. I'll see you at the closing bell.